Hello everyone, welcome to TalentSprint. In this session of economics, we shall discuss capital market. So earlier we have seen money market, this is capital market. In money market, the money is lent or borrowed up to a period of 364 days. If it is more than 364 days, it is called as capital market. So smaller amounts are referred to money. Here I am referring to bigger amount, so it is called as capital. That's why it is named as capital market. That is a major difference between capital market and money market. So capital market involves borrowing or lending of money for a period more than 364 days, that is more than 1 year. So it is called as long term borrowing market. And the SEBI is the regulator of capital market in India. Earlier it was a partial regulator, now it is the total regulator of capital market in India. Securities and Exchange Board of India, which is in Mumbai. SEBI is the total capital market regulator in India. Now we shall see what are the terms related to capital market. So the first term is share. Most of us don't know about capital market. So first we shall see what are the terms in capital market. When we study about the terms, we'll grasp the total capital market at least by 75%. Okay, so be careful while studying these or seeing these terms. So first, what is a share? Share means it is a part of investment in a company. Suppose there is an investment of 10 lakhs. 10 people have invested 1 lakh. So each percentage investment is the 10%. Okay, so each person is holding 10% share in a company. So 10 people are holding 10 shares, each of value 1 lakh. So total amount of the shares is 10 lakh rupees. So share is a part of investment in a company. So when I hold a share in a company, he is called a shareholder of the company. The person who is holding a share in a company. Any company may be owning share in another company also. Okay, not only persons but also companies hold shares in another companies. So they are called shareholders or investors in the companies. Clear? Next is dividend. What do you mean by dividend? So generally when we give money, right, we get interest. But here in the term of capital market, there is no dividend. Suppose if the share price has increased, so based upon your shareholding pattern, you get dividend. What do you mean by dividend? It's a divided profit. Suppose I have a profit of 10 rupees. So there are 10 shareholders in my company. So actually they are holding 10% each. So I have to divide the profit and distribute based upon their shareholding capacity. Suppose each person is holding 10%, so they will get 10% of that 10 rupees. So each one will get 1 rupee. Like that. Suppose one person is holding 30%. So you will get 3 rupees in that 10 rupees. Clear with that? Okay. So based on shareholding pattern, they will get the divided profit. That is called dividend. Clear with this? Next is bull. So increase in share price is called bull. Generally you see bull statues near the capital market or stock market. So that's why all people will aim for bull, that is increase in share price. They expect the share price to increase. Whenever the share price increases, they will get dividend. Suppose if the share price is 10 rupees, it has become 11 rupees. It is bull. Suppose it has become 9 rupees. It is called bear. Decrease in share price is called as bear. Okay. So if it has become 9 rupees, you have lost 1 rupee. No one will give you that 1 rupee. You can't go to company and say give my 1 rupee. That's it. Lost means lost. Clear with this? Okay. Bull and bear means increase and decrease in value of the share prices. Clear? Next, some more terms related to capital market. Next, what is a stock exchange? So stock exchange is a platform where these buyers and sellers, that is borrowers and lenders of money, will meet at this platform. Okay, companies will list their shares and investors or shareholders will buy those shares and they become the shareholders or investors of the company. So they are giving money to the companies. So whenever there is profit, the profit will be distributed among the shareholders. Clear with this? Clear? Next is index. What do you mean by index? Index is the average of the share prices of the companies which are trading on the stock exchange. Suppose there are 10 companies trading on a stock exchange. Example, Bombay Stock Exchange. So if I do average of those 10 companies share values, some may be in positive, some may be in negative. So I will get the index of that stock exchange. Clear with this? So index means it is an average of the share prices of all the companies which are trading on that stock exchange. Clear? Next is DMAT, dematerialized account. DMAT full form is dematerialized accounts. So whenever a person is buying shares, there may be no written documents. Okay, he will be buying online and the company will be selling online. No paper business. Why this process? Because when I maintain in paper, the paper may be torn out. It may be stolen. It may catch fire. All these problems are there. So no physical form of maintaining shares is done. Only the shares are bought and sold only through electronic format, that is online. That means suppose I am buying shares in one company, say 10 shares of 10 rupees each. That means 100 rupees shares are there with me. So that will be shown in my account. I have 10 shares of this much value in that company. Okay, just a record how we have money in our internet banking through numbers, right? I have 1 lakh rupees in my account, like that, only in number format. Company will not issue any paper format. Clear with this? So to buy shares or to sell shares, that means for every transaction on a capital market, we need DMAT account, dematerialized account. Clear with this? Some more terms in capital market. Next is mutual fund. So what do you mean by mutual fund? Mutual fund is an investment vehicle where money is pooled from different investors. Suppose I want to invest, I can't invest a larger amount. I can't invest 1 lakh rupees. I want to invest 10,000 rupees for 10 months, like a recurring deposit, not like a fixed deposit. So I can go for mutual funds. And on behalf of me, some mutual fund managers will be there. They are called portfolio managers. So they are experts. I don't know about capital market now. So they will be taking my money and they will invest in different shares of the companies. Okay, tell me which is more risky. Suppose I am doing the trading on capital market, I am giving money to some others to do trading. Which is more risky? Because I am giving more money, sorry, I am giving money to another person, that is risky. Yes or no? Because if I am trading, even though if there is loss, I will not feel that much. But if I am giving money to someone else, there is loss, I will feel a lot. Okay, so mutual funds are very risky in nature and also very profitable in nature. The utmost required thing in a capital market is patience. Suppose I have 1 lakh shares in a company. Each share is of 10 rupees. That means I have 10 lakh worth shares. Suppose it has become 11 rupees. That means it has become 11 lakhs. So people, what they do is they sell it for instant profits. Suppose if it becomes 15 rupees, I have 15 lakhs rupees shares. Suppose if it becomes 20 rupees, 20 lakh shares. Suppose if it becomes 100 rupees, I have 1 crore, that is 100 lakh rupees shares. Okay, I can become crorepati also. So that means I need utmost patience in a capital market. So patience is a very required thing in a capital market. We have to wait till it becomes at a very good price. People sell it as soon as they get instant profits. Okay, this we should not do. We should invest in long terms so that we get higher amounts. Okay, the leader in capital market is Warren Buffett. Okay, he has become rich because of investing capital market wisely. Okay, he has a company only for investing in capital market only. Okay, next is net asset value. So what do you mean by net asset value? It is a value of the mutual fund per share. So net asset value is value of the mutual fund per share is called the net asset value. So daily it will be keeps on changing with respect to the stock exchange. Clear with this? Next is systematic investment plan. So mutual funds have advantage. We can have a fixed deposit or we can have like a recurring deposit. The terms used is SIP. Suppose I want to invest monthly or quarterly. So I can invest in a mutual fund through SIP. Okay, suppose I want to invest 1000 rupees every month to the mutual fund, like for 1 year. Okay, so I can go for SIP. So it is a periodical investment in the mutual fund based upon my capacity. Clear with this? Next is foreign institutional investor, FII. So some foreign people, they get registered with SEBI and they want to make money through Indian stock exchange. So when they get registered with SEBI, they are called as foreign institutional investors, and they make foreign institutional investment or foreign portfolio investment, FPI. Okay, and next is participatory notes or P notes. So what do you mean by participatory? As the name says, someone is participating on behalf of the registered person on the Indian stock exchange. Suppose a foreign investor has registered to invest on Indian stock exchange. Instead of he investing, he will give some permission to others to invest on Indian stock exchange. So it is illegal or not? Yes. So they give participatory notes to others to invest on behalf of them on Indian stock exchanges. Okay, so these are called as participatory notes. So SEBI will take serious action on them. They will dump, because they dump money into the Indian markets through participatory notes. Clear with this? Next is Indian Depository Receipt, IDR. So what is this Indian Depository Receipt? Suppose a foreign company, it wants to invest on Indian stock exchange. So it can do so through IDRs which are issued by SEBI. Clear with this? And next is Global Depository Receipt, GDR. So like IDR, GDR is there. So for suppose any company wants to invest on global stock exchanges, it can do so through GDRs issued by the respective stock exchange. Suppose I want to trade on Hong Kong stock exchange. I need to get GDRs so that I can invest on Hong Kong stock exchanges. It is equivalent to American Depository Receipt, like our Indian Depository Receipt. So suppose any company wants to invest on American stock exchanges, they can do so through ADRs. Clear with this? Okay, these are some of the terms of capital market. Now we shall see the classification of capital market. So it is classified into two types. So first is primary market or new issue market. Next is secondary market. So first, what is this primary market? Why it is called new issue? Because it involves IPO, initial public offering. So what is this IPO? So there is a small story. Suppose now I want to make money into my company. Suppose I have 1 lakh rupees, I want to make 9 lakh rupees because I need investment so that I want to improve my business. So I will ask my friends, they have not given me money. So I'm going to capital market. Now first, I need to get permission or not? Yes. So I need to go and approach SEBI. So first I'm a delisted company. Then I'll get listed on the stock exchange. It is called getting the permission from SEBI. Listing is called getting the permission from SEBI. So when a delisted company gets listed on the stock exchange and it will issue its first share, it is called an IPO. Now earlier I was not listed on a stock exchange. So when I get listed on the stock exchange, people will get to know that is a company called ABC. So he wants some money. So he may be making profits. So I will go and invest in that company. So when people are investing in my company, I'll get money, I'll use it for my company business growth. What is the aim of the investor who is investing money? He wants to make more dividends from that. Okay, so his aim is that. So both investors and companies have their own respective profit aims. Clear with this? So first I need to get listed from SEBI on a stock exchange. So after getting listed, first time I will issue shares. So those shares are called as IPO, initial public offer. That means I am going to the public for the first time to issue my shares. It is called as initial public offer. Next is secondary market. So it involves FPO, follow on public offer. So whatever I issue after IPO, everything comes under FPO, follow on public offer. First time I have issued suppose 5 shares of 10 rupees. So now I am going to issue some more shares. So now they come under FPO. Even though they are fresh or even though they are old. So second time when I am doing for issuing on a stock exchange, it is called as FPO, follow on public offer. Clear about these two types of markets? So primary market involves only issuing of the fresh securities. That's why it is called as new issue market. Secondary market is after IPO, whatever I issue, if it is fresh or old, it is called as FPO, follow on public offer. Okay, this is called secondary market. Clear about the classification of capital market? Moving on to the stock exchanges of the world. So there are different stock exchanges of the world. We shall see some of the important ones. So first is Bombay Stock Exchange. It has the index BSE Sensex. So I have told you what is index. Index means it is an average of all the share values of the companies which are trading on it. BSE Sensex has 30 companies. So when I do average of those 30 company share values, I will get BSE Sensex value. Currently it is trading around 30,000 plus points. Okay. Next is National Stock Exchange, NSE Nifty. It is a group of 50 companies. Don't think there are only 50 companies. There are other indices also. Nifty Junior, like that. Okay, Nifty Next 50. This is a famous index, NSE Nifty. It is a group of 50 companies. So when I do average of those 50 companies share values, I will get NSE Nifty value. Currently it is 10,000 plus. Okay, it may be changing daily. Clear with the next is London Stock Exchange. It has an index called FTSE, Financial Times Stock Exchange. The name of the index is FTSE. Next is China Stock Exchange, SSC Composite, Shanghai Sensitive Index Stock Exchange or Shanghai Stock Exchange Composite. Clear with this? Next is Japan Stock Exchange. It has an index called Nikkei. Next is Hong Kong Stock Exchange, Hang Seng is the index. Next is Singapore Stock Exchange, CIMEX. And there are some indices for US Stock Exchange like NYSE, New York Stock Exchange. The largest stock exchange in the world in terms of money value. Okay, oldest is Amsterdam Stock Exchange, established in 1602. Okay, in Netherlands. And there are some more indices for in the US. Dow Jones, Standard and Poor's, S&P, all these are indices of various stock exchanges in the US. These are some of the important ones for us. Moving on to Bombay Stock Exchange. It is the oldest in Asia. It was established in 1875. Okay, the earlier name of Bombay Stock Exchange is the Native Share and Stock Brokers Association. Okay, it was established at Dalal Street in Mumbai in 1875. Oldest in Asia. Okay, oldest in the world is, I've told you already, Amsterdam Stock Exchange in Netherlands. Next, the present listings on Bombay Stock Exchange is 5,700 plus companies are listed on Bombay Stock Exchange, and there are various indices like BSE Sensex small cap, mid cap, large cap, BSE 500. BSE Sensex is a group of 50 companies and other companies are listed on other indices. I have a doubt here. What is my doubt? Suppose if I am listed on Bombay Stock Exchange Sensex, can I be listed on BSE 500? Yes. I can be listed on any index, okay, multiple indices also. There is no rule that you have to get listed on only one index. Clear with this? So this is about Bombay Stock Exchange. Next is about National Stock Exchange, NSE. So it was established in the year 1992 at Mumbai. Okay, and the present listings are 1690 plus companies are getting traded on National Stock Exchange. And the present indices it has NSE Nifty, NSE Nifty Next 50, NSE Nifty 500, all these are indices of National Stock Exchange. NSE Nifty is a group of 50 companies, 50. Okay, when I do average of those 50 companies share values, I'll get NSE Nifty. Clear with this? Next is our capital market regulator, that is SEBI, the big brother of the total capital market. It is SEBI. So it was established actually in 1988, but it was made as a statutory body through SEBI Act of 1992 on 12th April 1992. What do you mean by statutory body? Having an act of parliament. It is called as statutory body. Constitutional body means it should be mentioned in the constitution. But it is not a constitutional body, it is only statutory body because it has an act of parliament. Okay, it is headquartered in Mumbai. The present chairman is Ajay Tyagi. Okay, and the goal is to promote the interests of both investors and companies at a friendly environment. Companies should make money and investors should make profits at a healthy environment. This is the main goal of SEBI for regulating the capital market in India. Okay, so clear with this. So listing on a stock exchange is done by SEBI, and also delisting, if I want to remove a company from a stock exchange also, is done by SEBI. So clear about capital market. So this is all for this session. We shall meet in the next session. Thank you.